Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It's OKC CFA, CFP on Twitter. I've got some wine here tonight. We're doing a new series called Exencial After Dark, where I'm going to be answering some technical analysis questions that we've gotten from clients and of course here on Twitter and YouTube as well. So the question that I got here this week was, hey Alex, can you chart Pfizer and Moderna for me? Tell you what you think from a technical perspective. What are those names saying? So a concept I'm going to introduce here is something called Guppy moving averages. And what are Guppy multiple moving averages? Well, it's a collection of moving averages you can use to take a look at a stock and see if it's at a breakout or an inflection point. What you want to do is look at whether those moving averages are converging and diverging as they tighten. Let me show you exactly what I mean. I'll go to my screen. So here's a chart of Moderna. Right, from last year, we had a bunch of news going on, right? Markets are going crazy, markets are going down, they're ripping down 20 odd percent, 30% in some cases, 8% in a day. What do? We can use some moving averages to tell us how to price some securities in the short term. Now, long term, of course, we're not traders, we're investors, but hey, I was asked to do some technical analysis, got to give the people what they want. So the way you set up a Guppy multiple moving average is you want to set up a few different short-term exponential moving averages. I like EMAs versus SMAs. I won't get into why I like exponential versus simple on this particular video, but I use the exponential. And you went 5, 10, and 20 days. I coded those green. I did 50, 100, and 200 days, coded those red. What you want to look for is when the lines tighten and then diverge. That signals a breakout. So for example, here on February 21st, 2020, I don't have any information about what was going on in the news of the day. I'm just looking at the chart. These lines have been trending together for a while, converged, and then broke out, right? You had a big breakout day. You could buy this stock, according to a Guppy exponential moving average and multiple moving average, anytime after the breakout, a couple days. So on the 21st, you had the breakout, you saw these lines diverge. You bought it somewhere around here at 24.25. Keep riding, keep riding, keep riding until it consolidates back, right? Long terms catch up to the short terms. And maybe you had a high of 80, sold it back here at 59. Still, you bought it at what, 24, 25. Maybe you bought it down here at 20. You still had more than 100% gain. So that's how the chart works. You want to look for, as the lines come together, as those multiple moving averages, the green and red, come together and then diverge, that's a breakout on the upside and the downside. Pfizer, opposite issue. Same February 20, right? You had all of these lines converge, right? They all converge, boom. Green went below the red. That's a sell signal. That means your short-term averages are moving significantly below and expanding below your long-term averages. You sell right there at, let's say, 37. Don't pick it back up until they converge. You're at 34. You profited 10 or so percent on the trade. Not as big as Moderna, but same thing right here. If you followed the same Guppy moving averages here on April 12th, right? Wrote it from 21. I don't know if Coifin will load, but obviously you've had some additional upside from there. So this is just one technical analysis tool. I like it. It shows you when to buy and sell on a technical basis. Again, long term, we're investors. We think most markets are worth owning at almost all times, although we do try to take advantage of anything that is crazy in terms of price. If you want some additional information to go along with your Guppy moving averages, to go along with our content, feel free to follow us on Twitter. My handle is OKCCFACFP. Feel free to go ahead and click that subscribe button on YouTube. Thanks so much. I'm out.